Hey, good morning. Let's go over today's trade plan. So in the overnight session so far, we've seen that buyers have been active and the market has held above that 32 to 34 area that we broke out above yesterday. And at this point, if we zoom out a bit, we can see that bigger picture. Basically, the market is trying to break out from one balance area and go back in and test another at some higher prices here. So as the market moves higher, the sellers can still be active at the resistance zones of the prior balance and the prior range that we broke down from. So short term, we know that buyers are in firm control here, especially above 32 quarter to 34 quarter, which we're going to be using as the micro bull bear zone to establish our very short term directional bias. And holding above that zone just tells us that there's potential for the market to go up and retest 39 to 41 and potentially break out and then go up and test 44.5 to 46.5, which is a inflection point where the sellers can still be active. But if there's a lot of momentum behind the move, then it just calls for some caution because we have already put in a rotation off the 40.75 resistance from yesterday. And at this point, if we break out above, it will likely happen on fairly strong market internals. Otherwise, the market can simply fail at 39 to 41. So if we break out above 39 to 41, 44.5 to 46.5 is an inflection point where sellers can be active, but we just have to be a bit cautious because the market has already digested this short-term up move. And at that point, the market may have to head up to 48.75 and potentially even 51 to 53 before finding some stronger sellers in the market. But as the market moves up, we just have to understand that we are breaking out from one short-term balance area and then heading back up and retesting another one, the one that we broke down from just a couple of weeks ago. So as we go back up into that prior range, sellers can still be active at resistance, and because of that, we have to be a bit more nimble and a bit more flexible. Majority of the gains that were a bit more clear to spot in the market, I think have already happened. And at this point, as we go up into 44.5 to 46.5, 48.75, 51 to 53, these are areas where there can be a bit more struggle and we can see a bit more rejection in the market. So, especially for buyers, I think they have to be a bit more careful as the market heads back up into those resistance zones because, we could still see a pretty decent sell response on first test of those zones. And, we can get some failure at those zones as well. So, as we head higher, the risk does start shifting more to the buy side. And, again, it just calls for a bit more caution. It doesn't mean that you can't take long setups, but just be aware of trade location and, just be aware of the fact that there could be some failure that can happen as the market goes up here and there can be a bit more struggle at these zones. And that can create a bit more chop, more rotation, and you can actually get some pretty decent short setups off if the internals are not extremely strong as the market heads up into initial resistance or any of these higher prices. On the downside, if we fail at 39 to 41 or 37.5, that would tell us that the market is at least short term not extremely strong, and there could be that potential for a pullback. Now on the downside, we're using 32 quarter, 34 quarter as the micro bull bear zone. Buyers can maintain control above this area, and if we break the micro bull bear zone, then on the downside, the first short-term inflection point is 26.5 to 28.5. Buyers could be active here, but the area would call for caution just because the market has balanced above it for quite some time now, yesterday's session and the overnight session, and there's an open gap at 23.75, high volume area around 23.75 as well. So at that point, the market may have to go down to test the 23 to 25 zone before we get any decent buy response. And at that point, the market could balance between initial support, micro bull bear zone, something like that. So this is a inflection point for buyers to step in. So first test of 26.5 to 28.5 can attract buyers, but we just have to be a bit cautious because it's right below the micro bull bear. And if we go in a straight line below 32 down to 23, 25, that would be a pretty decent fade setup on the day time frame, and that can still result in a 5 to 8 point bounce. So pretty decent long setup, decent probabilities, good reward to risk, and this is a spot where buyers could be active on first test. Below 23, the short-term control can shift from buyers being in control to sellers now being in control, and we could see a breakdown to 14 to 16 before we get any better buy response in this market. So given the recent strength, in the event of a pullback, 23 to 25 will likely provide a tradable reaction, and even 26 to 28.5 has that potential, but it just requires more of a real-time read. Ideally, the market actually stays strong heading into the 44.5, 46.5, maybe 48.75, and then we get some selling in this market. Because at that point the market can still balance at some of these higher prices and eventually start making its way back up. But if we fail at 39 to 41 or 37.5, then ES could have to go down and test 23 to 25 before we get some more consolidation and some more balance. There aren't really any major econ reports out on the day time frame today. We have the JOLTS report at 9 a.m. Central, but it's not really a big market mover. It's just that today that's kind of the only report that's noteworthy. So just to keep that in mind, around 9 a.m. Central Time, just know that there could be a little bit of movement based on the econ report. Other than that, there aren't really any major catalysts to really just drive the market based on an econ report. Right now, as far as the movement we're seeing, it's really, I think, based more on technicals, and we got really oversold down into the strong support zone. We've gotten a really nice rejection, and now we're testing the upper end of this recent range around 37.5, 39 to 41, and I think heading into today, it's again going to be more of a balance type session, but it's going to be a matter of figuring out, is the market strong enough to put in a breakout above 39 to 41 and test some of these upper resistance areas, and then we get some balancing, or can we get a failure at 39 to 41, and then actually the market may have to head lower down to 23, 25 or 26.5 to 28.5, and then we can balance, in this range. So, right now the market is near an inflection point. We are at the top of balance, and really it could go either way. We can either fail here and head lower, or if there's enough strength in the market, and the internals are looking good, the momentum's good, then we could actually head higher and test some of the upper resistance zones before we start seeing some better, sell responses in the market, and the market starts putting in a balance at higher prices. So, if you're getting good trade location on the long side, internals are looking good. The long side can still work out here, but the upside is going to be a bit tougher now. Heading higher, right? I think the easy gains, or the fast gains, have already been made, and now from here on out, up into 44.5, 46.5, and 51 to 53, it is going to be a bit tougher for buyers to push through those zones. So those can provide good short setups on the day time frame as well. So those are the ideas heading into the session. Let's see if the buyers are able to maintain that short-term strength this morning, and then take it from there.